Hey everybody, welcome to Trading Capital's daily analysis video. I'm your head market analyst here, Curtis Gowden, jumping into the charts on this December 22nd. What a sell-off it initially was. Early on in the morning, we just saw the markets continuing to dump. If I flip to the intraday, you can see we had a gap down, and then basically what set the markets off was the fact that there were a bunch of GDP numbers that came in stronger than expected, and that's very counterintuitive because if you would expect a strong GDP number would mean that the economy is in good shape, which technically it is, but that means that central banks have to be more aggressive in their tightening cycle. But nonetheless, we had this big gap down, a little bear flag consolidation, and a break. And then the sell plan just started executing, and maybe this is tax loss selling, but nonetheless, you put in this beautiful hammer candle over here, bottoming tail, at the low of the intraday, and you also took out the major pivot low from December 20th. And then from that low at 374, you just had an epic rally, a very impressive reversal off the low to basically wipe out half of the losses that were lost today. Now the market still did finish red today. The S&P closed down minus 1.42%, so it is still a down day. But it's interesting to see that small cap showed relative strength, tech showed relative weakness, and we'll touch base on a couple of those. But nonetheless, the fact that you weren't able to close back above the 50-day moving average is not a short-term positive for the markets. Despite you did rally off of the lows, I still think there's more downside in the markets. And one of the reasons I think there's more downside to come, if you simply look at this technical gap fill around 372, we came so close with this wick. I really thought that it was going to fill that gap today. Now, if it filled this gap today, I would have anticipated a technical bounce in the markets, maybe up to this trend line around 389. Again, recapturing that 50-day moving average. A lot of algorithms like to trade off of the 50-day moving average, so it's really often we do see some buying pressure start to occur when that 50-day moving average starts to be recaptured. But nonetheless, it looks like it is a failed attempt. Even though we closed back above this low over here, if we flip to the Nasdaq, which is the tech-heavy sector, the Qs actually could not recapture this pivot low over here. We closed just slightly below, and what that signals to me is that there's still relative weakness in the tech space. Obviously, with the likes of Tesla falling dramatically, we had Apple down 2.38%, Microsoft down, Amazon down, Google down, but Tesla and the semiconductors were the big losers of the days. If we simply look at the SMH has had a pretty impressive reversal, basically closing back on that 50-day moving average, but nonetheless, technical damage is done on the semiconductors. What I'm seeing here is you had your bullish pattern consolidation, which did favor a move to the upside. But considering now we broke that pattern, which you broke it here and confirmed today, there's likely more downside to come in the semiconductors. Now, due to the fact that you have had a sharp move from the 230 mark all the way down to the 190, I still think you could probably get a retrace back to this pivot over here around 210, or even potentially filling this gap fill around 212, which would coincide with maybe a retrace back to this upsloping trend line. That's kind of the line in the sand I'm watching. I am considering a short trade setup on the semis. If we can fill this gap, get a retrace, I do think that we will likely start to roll over sooner rather than later. Taking a look at the IWM, we were quite busy in the markets today. We covered a few shorts, which is a beautiful thing that we did today. Probably should have covered a few more, but nonetheless, I still am comfortable with what we did today. We actually bought up many stocks today, a lot of the smaller cap stocks, because the Russell was showing great relative strength. If you look at the Russell, this is actually a daily bottoming tail, closing back above these previous lows, and basically almost at the high of this candle over here. That's a short-term positive for the IWM. That being said, this is one of the reasons I started buying smaller cap stocks today, issuing about 4 different alerts, 5 different alerts in the small cap space. I think the Russell gets a retrace back to this neckline. This was your original breakdown, which you have confirmed, and naturally you see a technical retrace, which could coincide with somewhere on this upsloping channel. That's kind of my expectations for the Russell. So it's not that much upside, but you know, a 2 to 3% rally in the Russell can move some of these small cap stocks in and around the range of 5 to 15% or more. A couple of the plays that we did today, SWBI, one of my favorite setups. I've been watching this and we executed the alert around 8:35. Look at this beautiful reversal signal. That is a thing of beauty in my mind. Even if you look on the weekly chart where we still have 1 day left, but you're putting in a beautiful weekly reversal bottoming tail. This stock has just been so beaten down and discounted, and one of the things that we have to factor in is that if we are going to recession and unemployment upticks, generally when unemployment rises, you start to see crime rates rise, which is kind of a good leading signal for where the economy is. If you're now seeing a bunch of buyers come into Smith & Wesson, a stock that has been demolished lately, perhaps this is a big signal for the economy where we start to see unemployment increase, crime start to uptick, and people, what do they like to rely on? Their guns, especially in the United States. Now, where do I see big resistance? Well, your first big resistance is going to be this wide range red bar sell-off around 938, but I actually think we can get closer to this $10 level. That's where I think we get a natural retrace to on Smith & Wesson, which would be a fantastic gain. We also did buy EVGO. EVGO is basically had a short-term bounce off our level, but we're closing flat in the trade. This is another one that's just extremely discounted. You're on a beautiful daily, massive sell side pressure, oversold. Even if you look at the weekly, you had 6 weeks of consecutive selling. You can see I love my parallels, connecting your pivot high to your pivot high, connecting your pivot low to pivot low to pivot low. If we do go through this parallel channel, you have a secondary parallel which connects this major parallel, which puts you to right around 337. I have no problem accumulating a larger position, but I do think that this one at the minimum gets a technical retrace back to 490, or even potentially this 529 pivot over here before we start to see the sell side pressure. And one of the reasons stocks are seeing a lot of pressure is probably due to tax loss selling. We did add to our PayPal. What an impeccable add to our PayPal that was. PayPal actually made a new 52-week low today, took out this pivot over here, but reversed off of that level. We gave a buy signal around 66, I think it was 66, 65, and look at that reversal. We're almost in the money on PayPal. I think PayPal has a tremendous amount of upside. If you simply look at this 92 all the way down to 66.50, a natural given retrace probably takes you at the minimum to this $75 level. So that should be a pretty decent trade for us. We also bought TDOC today, so we're starting to accumulate a position, and what a beautiful bounce off that level. I was hoping for the double bottom. I was watching this intraday very closely, but I started to see some accumulation patterns occurring, and one of the patterns that I started to see was this downsloping trend line. And basically what we did was we broke out here, confirmed, got a retrace, which was our buy signal, and look at the power move in TDOC. This is one of obviously Kathy's biggest holdings, so I do think that she's also been buying, and we're going to see a lot of natural buying pressure. TDOC at the minimum, many people would think that this is a bearish pattern considering that you broke this, which in theory it is, but you haven't confirmed the break despite today's large sell-off. Even a natural simple retrace back to this neckline here, or back to this trend line, puts us in the money double digits and enough to basically pull profits off the table. So I do think that we're in a very, very good position to see TDOC bounce. We did also pick up more Tesla today. So Tesla is the standout one that has been getting crushed. Clearly you can see that it sliced through this parallel channel like a hot knife through butter, but it has not confirmed below this channel. So with that understanding in mind, I think we could still see a technical bounce on Tesla. Today there was a lot of margin selling occurring. Big people were having to dump Tesla positions because of being margin called. So that if that margin selling abates, then we will likely see a snapback on Tesla, probably taking us all the way back to eventually the 159, 160 area, which would be a beautiful, beautiful move on Tesla. I still hope that Tesla goes a little bit lower so that we can